Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Again, in the gold market as usual, here we just could continue the discussion of the process that we have talked about yesterday. So in the daily chart, as you can see that trading range in the gold market has dropped significantly. It's very tight range with the third trading session in a row. It's very small candles are forming, so mostly it indicates as an indecision and loss of the interest to the gold market. So right now probably investors just think what to do next, and probably either some event should happen on the gold market that could push it in one another direction, or some important orders should be touched. Some stops maybe just this market also continue move in one or other direction, probably to the downside. So here today's trading session, you can see that market could form some interesting pattern. Usually it forms at the top and we call it as a reversal pattern, but here is also interesting moment because take a look, market has opened, shows the top higher than the previous session, and if it will close below the lows, this will look a bit bearish, moderately bearish in the short-term perspective. But in general, as you can see, mostly gold just stands on the fib support. It's the 1327 area, just creeping with it. No upward bounce, no downward breakout. Although yesterday's node was really not bad. Statistics have been released on the United States economy, so it's probably could push market slightly lower. But in general, this just playing upon the fib support looks mostly bearish since market. If gold market right now indeed was bullish, it's probably should show some upward action here, but we don't see it. This market just tests this area, minor bounce. Right now it moves slightly lower and just stands upon it. So it very often leads to some downward continuation here. In general, this corresponds to what we expect in the gold market, with the one exception that previously we thought that probably could be the hand shoulders pattern. And we continue to watch for this pattern, but as we said yesterday, probably market should take it out of these lows first, and only after that it probably will start will have the chance to show this upward bounce. Because on the 4-hour time frame chart, we have talked about it recently. This is definitely the sign of the bearish dynamic pressure. So you can see the trend has shifted bullish on the gold market, but no upward action has followed. So market just moves sideways, then just creeping with this support area, support line, even shows some minor breakout here. Also, guys, this is not the bullish grabber. Market hasn't tested, hasn't touched this MACD line. So this is not the bullish pattern. That's why we said that minimum target of the dynamic pressure usually taken out of these lows. As soon as this will happen, market will get the chance to show this upward action. But it will depend what's standing below this area. So if some significant order stands here or something of that sort, market could move directly to the downside. This also could happen. So that's why we think that's better to move step by step. First, let's see how gold will manage this bearish bearish dynamic pressure. And after that, we will start to think about these head shoulders, whether the market will start to move up or not. But right now, all attention stands on this pattern. On the hourly chart, we also talked about it recently. Market could take the shape. So either you could treat with the butterfly here. Just you don't see the extension of this pattern. It stands right here. As you can see, green line, 1350 area, 15 area. This is our most probable destination point, where the bearish dynamic pressure on the 4-hour time frame chart will complete its minimum target. Also, take a look. This will be the weekly pivot support point. So you could treat this as the butterfly separately, or you could take a look at the larger pattern. This could be some kind of the free drive, although the second drive is a bit extended in time. But based on the ratios, extensions, it stands perfectly. So take a look. The first drop was right at 127 extension, 1322. After that, the second drive has started to form and takes the shape of the butterfly. The third drive will be precisely at 1618 of the first one, and take a look, 27. Sorry, this is the triangle. 27 of the second. It's all simultaneously the target of the butterfly. That's why probably you could treat it as a 3-drive pattern as well. So all that we could do currently is just to wait when the market will finish this patterns, finish the bearish dynamic pressure on the forward temporary chart. So that if you would like to take the long position, for you guys, it's better to wait when these patterns will be either completed at the 1350 area or cancelled. This could happen only if market will start to move immediately to the upside and taking out of this top, move above the weekly pivot point, and will start to move to the upside. If you have the bearish view, well, you probably could try to trade this setup, but currently, guys, it's almost 1-to-1 risk to risk reward ratio, because you will have to place stops above this area, and target will be 1350, so approximately the equal distance from here to the stop and right at the target. So that's you should think twice before taking the short position here as well. Maybe only if you will find a suitable place for placing the tightest stop here. Well, that's all that we could say about the gold market. But in general, guys, when you see such action as on the daily chart, so significant contraction on the trading range, it makes me think that some storm is coming. Because usually when the market contracts, trading range very significant, this probably leads later to some expansion of the trading range, and it's really could lead to significant action. So let's see.